Have you ever wished you had a kind of secret weapon for your trading? Well, today, we're going to decode one of the most powerful signals on any chart, the long wick candlestick. You can think of these as your eyes on the market, helping you spot potential trend changes, sometimes before they even happen. I mean, just think about that for a second. What would it be like to see the market's momentum shift right at that perfect moment? That's really the promise of understanding these long wick candles, and we're about to break down exactly how you can start using them. So, here's our game plan for this explainer. We're going to start with the 4 core patterns you need to know. Then we'll get into the story behind them, why context is everything, how to actually confirm a signal, and then we'll even get into some pro-level techniques to add to your toolbox. All right, first things first. Before you can use any tool, you have to know what it is. And for us, that means learning to identify the 4 primary long wick patterns that can signal these potential reversals. Okay, so this is the hammer. You're going to look for this at the bottom of a downtrend. Now, the key feature here, the thing that tells the whole story, is that long lower wick. It's showing us that sellers tried to slam the price down, but buyers came roaring back and said, nope, not today. And a little pro tip. The longer that wick is compared to the body, the more powerful that rejection was. And here we have the hammer's evil twin, the shooting star. They are perfect mirror images of each other. The hammer shows up in a downtrend and hints at a move up. The shooting star, it shows up in an uptrend and warns of a potential drop. One has the wick below, the other has it above. Seeing them side by side like this really makes the whole concept click, right? Now let's put it all together. This table makes it super clear. Just look at the top 2, the hammer and the inverted hammer. They both signal a bullish reversal, and they only count if you see them in a downtrend. The bottom 2, the shooting star and the hanging man, they do the exact opposite. They signal a bearish reversal, and you'll only find them in an uptrend. The number 1 rule is you have to match the right pattern to the right trend. So we know what these patterns look like, but what are they actually telling us? Well, every single one of these candles tells a dramatic story about a fierce battle between buyers and sellers that happened in a very short amount of time. So let's use the hammer as our example. At first, sellers are totally in charge. They're pushing the price way, way down, and that's what creates that long wick. But then something flips. Buyers see those super low prices as a total bargain, and they rush in, completely rejecting the seller's move. They push the price all the way back up, so it closes right near where it opened. You're literally watching a power shift happen on your screen. So the takeaway here is this. That long wick represents a moment of weakness. The bears, or the sellers, they're losing their momentum. Maybe they're taking profits off the table. And at the exact same time, a whole new wave of buyers is stepping in. It's like seeing the first crack appear in the foundation of a trend. Okay, listen up, because this might be the single most important part of this whole explainer. You can learn to spot these patterns all day long, but if you see one just floating in the middle of nowhere on a chart, it's pretty much useless. Context is absolutely everything. And that all-important context comes from what we call a key level. The easiest way to think about it is a price zone that has a memory. It's an area where the price has turned around before, acting like a floor, which we call support, or a ceiling, which we call resistance. These specific locations on the chart are where our patterns suddenly become incredibly powerful. So, this all boils down to a simple but really effective 3-step strategy. Step 1, you find a major support or resistance level. Step 2, you patiently, and I mean patiently, wait for one of our 4 patterns to show up right at that level. And step 3, this is non-negotiable. You wait for confirmation before you do anything. All right, so let's dig into that crucial 3rd step. A great pattern at a key level is a fantastic sign, but we need one more piece of the puzzle before we act. We have to confirm that the reversal is actually for real. I'm going to say that one more time because it is that important. Seeing a hammer at a support level is the market tapping you on the shoulder saying, hey, pay attention. It is a signal to get ready. It is not the signal to jump into a trade. And why is that? Because the price could just stall out and then keep falling right through that level. So what does a real confirmation look like? Well, it's usually one of 2 things. You might see a big, strong candle in the new direction, like the one on the left that totally swallows up or engulfs the candle before it. Or you could see the price break above a little mini trend line, just like you see on the right. Both of these are the market giving you the green light, saying, okay, the reversal is on and we're moving. Okay, so you have the core strategy down. Now let's kick it up a notch and look at a couple of techniques that can help you find even better trade setups and really stack the odds in your favor. So this first technique is called stacking. This is when you don't just see one long wicked candle, but you see two or three, or maybe even more, all forming around the same key level. So what is this telling us? It's showing us the market tried to break through that level again and again and again, and it failed every single time. It's a huge sign that the buyers or sellers at that price are building a giant wall. And this is a fantastic example of that. In this case, sellers tried 14 separate times to push the price through a support zone, and they failed. The result was this whole cluster of long wick candles. I mean, that is an unbelievably strong signal that buyers are just absorbing everything thrown at them, and a big move up could be right around the corner. Now for another pro technique, multi-time frame analysis. The standard, safer way to do things is to wait for that confirmation signal on your main chart. But if you want to get what some traders call a sniper entry, you can zoom into a lower time frame. Oftentimes, you can spot the trend changing there much earlier, which lets you get in at a much better price. It's definitely more aggressive, but the potential reward is also much bigger. And this right here is exactly why that matters. This chart shows you the potential difference. That earlier entry you can sometimes get by looking at a lower time frame, well, it can dramatically increase your potential profit on a trade. You're just getting in that much closer to the true turning point. All right, let's wrap this all up with the key takeaways. First, know your four patterns: the hammer, shooting star, inverted hammer, and hanging man. Second, and this is a big one, only trade them when they show up at a key level of support or resistance. Third, always wait for confirmation. And finally, if you want to level up, look for those stacking patterns and think about using multiple timeframes to really fine-tune your entry. And that really just leaves us with one last question. You have the strategy now, but having the patience and the discipline to wait for every single one of those pieces to fall into place perfectly before you put your money on the line, well, that's the real game, isn't it?